After spending countless hours looking for the perfect home, all your hard work and patience is about to pay off.
The key thing for buyers to remember when it comes to closing is to make sure you're prepared ahead of time. There are going to be a few things that you're going to need to bring to closing that you should be prepared for. Number one is going to be picture ID. So you can identify yourself at the closing. We know that you're you. Also, any funds that will be due at closing, whether it be in the form of a cashier's check or a wire transfer, whatever the title agent requires. And also any additional documents that may have been required at the closing. Sometimes we have to bring a purchase agreement addendum to be signed at closing, or proof that your homeowners or your taxes were paid. So anything that your loan officer may have communicated to you right before the closing, make sure you bring that documentation with you. I think one of the most exciting things about closing your mortgage is setting a closing date. When you put the closing date on the purchase agreement, that is definitely a date that you're anticipating from the beginning of the process. But it is important to know that the closing date is not always set in stone. It is a target for us in operations, processing, underwriting, and closers. We do target that date. However, there are several factors that can come into play that could change that closing date throughout the process. And your loan officer or your processor will definitely keep you informed so that you know up front if your closing date is changing. Different types of loans can have different types of requirements and could cause a longer closing time for you, such as the FHA 203K loans, VA loans, rural development loans. You'll know what kind of loan you have. And when you talk to your loan officer, he or she should be able to give you a realistic expectation for the duration of your closing. One of the things I do as a closer is I approve those final figures before you get to the closing table. And you should be able to view those figures ideally 48 hours prior to closing. Make sure that you familiarize yourself with the HUD-1 settlement statement and go over it with your loan officer thoroughly. And if there's any questions or anything that you don't understand, make sure you ask your loan officer so we can get that squared away before closing. There are a lot of required documents that are needed in order to process your loan and to get you to the closing table. And you're working throughout the process with your loan officer and your processor to get that documentation to them. If all the requirement documentation isn't sent over to the processor or the loan officer in a timely fashion, it's possible for us to get down to the closing phase and still need that documentation in order to close. So working closely with your loan officer and your processor to make sure that you're giving them everything that they ask for in a timely manner will definitely streamline the process and make it go a lot smoother and faster. Sometimes when we're reviewing the final figures with the title company on the closing team, we come across a situation where the title company is having a little bit of trouble getting the final figures from the seller side of things or getting the payoff from the seller side. And that could potentially delay the closing because we can't finalize the HUD and approve those final figures until we have the seller side. Should that happen, the closing team is working closely with the title company, and the title company in a lot of cases is working with the realtors to make sure that we get this done as soon as possible. By the time you get to the closing phase of your mortgage process, you will have already determined whether or not you're going to have an escrow account. That's something that you would have worked with your loan officer on to determine. If you do decide to set up an escrow account, or in some cases it is required for your loan program, then I am the one who would be inputting those figures into your loan documentation to actually physically set up that escrow account for you. What an escrow account does is it allows us to collect additional monies on top of your principal and interest payment to pay off your taxes when they're due or your homeowner's insurance when they're due. So you won't have to worry about taking care of those items separate from your mortgage payment. It's all lumped into one payment for you and taken care of annually.
It's important prior to closing to go back to the home one more time with your realtor just to make sure that the home is in the condition that you expect it to be, that no damage has been done. If the seller has moved out, that they didn't leave anything behind that you don't want to deal with after closing. If any concerns come up during the final walkthrough process, it's important to get them taken care of with your realtor prior to closing. After closing, that home is yours and yours to take care of. After closing, your loan will be transferred to the servicing department. You will receive a letter from Ross Mortgage a few weeks after closing letting you know who the servicing company will be and what your loan number will be. You will get a temporary payment coupon at closing to make that first payment in case that transfer doesn't occur prior to that first payment being due.
Even though this is the end of the mortgage process, it's not the end of our relationship. You're going to be making payments to a different servicing company, but we're still going to be part of your team in order to help you with your financial mortgage needs.
He just was so smart about the process and the industry. And he said, after you buy your home, we're not going to stop communicating with you. If the rates go down, I will let you know, and we will get you a better deal. So I just felt like it was a total, you're my client for life, not just for the 2 months that we were working with him. And that just sealed the deal, for sure.